Bitcoin's October price increase suggests a near-term bull run in the face of regulation. Bitcoin and other cryptocurrencies are surging higher this week, continuing their month-long breakout from the stock market. While many investors continue to be perplexed by Bitcoin's volatile behavior, it is increasingly the safest bet as regulators worldwide signal a tightening of the crypto sector's regulatory environment. While the crypto market as a whole occasionally moves in lockstep with other risk-on assets, the asset class has shown some divergence since October. While the S&P 500, GSPC, has decreased in value over the last month, Bitcoin, the largest cryptocurrency, has increased by more than 15% and was trading at around $54,000 on Thursday. Ethereum, ETH, and Dogecoin, DOGE, both increased by more than 15% in the last week. Meanwhile, Shiba Inu coin, SHIB, has increased by over 150% but remains well below the value of a penny. Though cryptocurrency markets remain in a state of perpetual price discovery, investors generally agree that this week is bullish for Bitcoin. Bitcoin's $1 trillion market cap and ability to be used as a store of value, characteristics that compare it to gold, make it more appealing than ever to long-term investors. For larger institutional investors, it is more appealing than many other crypto assets due to its regulatory clarity. Other macro indicators, such as Federal Reserve decisions, could further sway the market in Bitcoin's favor. Bitcoin appears to be extremely technically sound, on the upside, said Christopher Vecchio, senior strategist at dailyfx.com. While Vecchio acknowledged that it's difficult to call an asset with Bitcoin's level of volatility a safe haven, he asserted that Bitcoin is, if anything, a leading risk indicator for technology stocks, and that BTC could trade higher in the coming weeks. Long-term Bitcoin holders generally agree that the asset's largest players are monitoring its risk-on behavior at the macro level. The SEC, the Fed, inflation, and ETF regulation are all on the radar of the big money traders. That is market-moving news, Ben Cousins, a principal at Lakestar, a venture capital firm based in the United Kingdom, told Yahoo Finance. Cousins, who owns Bitcoin, said the cryptocurrency's price volatility has made the last few months what die-hard Bitcoin investors refer to as a stacker's paradise. Throughout this volatile period, long-term BTC holders have been accumulating. This typically results in a supply-side squeeze, similar to what we're seeing now, he explained. Regulatory effect. According to billionaire investor and entrepreneur Matthew Roszak, Bitcoin is also benefiting from an increased focus on regulation. In terms of testimony from within Congress and U.S. government agencies, Roszak told Yahoo Finance, Bitcoin and Ethereum have excellent regulatory clarity. During a period of increased scrutiny of the crypto sector, Bitcoin, as risky as it may be, has established itself as one of the most secure crypto assets in the event of a crackdown. Speaking before the United States House Committee on Financial Services on Wednesday, Securities and Exchange Commission Chairman Gary Gensler reiterated his belief that the crypto sector requires increased regulation. Gensler asserted that the majority of cryptocurrencies are not currencies but rather investment vehicles that should be regulated under U.S. securities law. It is improbable that 5,000 or 6,000 different types of private currency will persist. Economic history indicates that is highly improbable, Gensler stated during his testimony. As a result, a large number of these are not true currencies. They are not being used to purchase a Starbucks coffee. The majority of them are investment vehicles, or means for entrepreneurs in the United States to raise capital. Gensler, however, agreed with Roszak in part, stating that a handful of crypto assets might be competing with gold or silver as a digital speculative store of value in the same way that gold has been a speculative store of value for centuries. Gensler's statement follows SEC precedent established under former Chairman Jay Clayton, which determined that Bitcoin and Ether, the cryptocurrency that powers the Ethereum network, are not securities. Gensler and other U.S. regulators, including the Treasury Department and Federal Reserve, are working to establish more comprehensive regulation of stablecoins at the issuer and platform level. While regulation of stablecoins does not appear to have a direct effect on the prices of Bitcoin and Ether, there may be knock-on effects for the broader crypto market in the near term if stablecoins are regulated more strictly. For starters, according to Eswar Parzad, an economics professor at Cornell University and author of The Future of Money, it would reduce liquidity. Such regulations may be viewed as a precursor to a broader regulatory crackdown on cryptocurrencies and crypto assets, Parzad explained. It will halt some trading flows, assuming people do not switch to other algorithmic stable coins, said Gina Peters, an assistant professor at the University of Chicago and a stablecoin researcher. Stablecoins, which are typically pegged one-to-one to the US dollar, are frequently used by more active crypto traders to trade in and out of other unpegged cryptocurrencies such as Bitcoin during periods of high volatility. While regulation may limit investor exposure to stablecoins and temporarily halt trading flows, Bitcoin's divergence from the S&P 500 may mean investors once again view it as a safe haven. With a market capitalization of $1 trillion, Bitcoin is frequently compared to digital gold. The market capitalization of gold is $10 trillion. Bitcoin would need to reach $500,000. While Roszak does not believe Bitcoin will reach that level in the near future, he remains bullish. It definitely tests you, he said of his decade-long journey of holding the asset through dramatic ups and downs. We hope you enjoyed watching and listening to this video. Please let us know your opinion in the comments area below. If you found our content useful, please like it and share it with your friends. Also, don't forget to subscribe to our channel and hit the notification bell for more crypto-related contents.